My name is Mark Dooley. I'm with Galilon Fertilizer. We're here this afternoon to talk a little bit about purchase now, buy later on this fertilizer. We're just going to go through a little bit of a presentation and see if we can help you make a decision of what would be the right decision to purchase now or purchase later. I'm in the sales side with Galilon. I travel southeast, south central North Dakota. I get into part of western Minnesota a little bit and the northern tier of South Dakota. I work the wholesale side of this. We don't work with the retail side, selling directly to the farmer. So we're strictly on the wholesale side. I worked 25 years in the retail sector, so I know the group that's in here today that's on the retail side. I know some of the frustrations that you guys go through, again, trying to make these purchases, when to buy, when to make some of these purchases. It gets to be a tough decision. How much risk do you take, and when do you pull the pin to do some of this? I have someone else with me here today, Alex Olson. Alex, sitting over here, she's with Galilon Fertilizer as well. She's an associate merchandiser working with us. We both work out of the Moorhead location. We've got an office over there. We have a liquid terminal over in Jamestown, and we have a liquid and a dry terminal in Jamestown. And then we have facilities. We purchase dry fertilizer in Minneapolis. We use Red Rock. We'll use Pine Bend, whatever terminals we have to out of Minneapolis. We'll source anhydrous ammonia, through Leal, Beulah, CF, out of Velva, Grand Forks, whatever. But so we're in all aspects of the fertilizer. We get into the specialties, the orthos, whatever products that we have to. So we get into a little bit of all of this. But we put together a little bit of a presentation here. We'll go through today and just kind of a little bit of an overview on these markets, a little bit of some of the things, I guess, that we looked at here, and then we'll take some questions and see if we can help you guys answer some of this. Forward-looking statement. We're not going to read through all of this, but it's just some of the data that we have here. The investor should not, place under undue reliance on these assumptions with some of this information that we're going to show you here today. We're going to talk a little bit about transportation. Transportation is a key in this fertilizer market. We all know that transportation is a huge thing, whether it's moving fertilizer, whether it's moving grain. The transportation, whether it's railroad, truck, there's times of the year that there's a lot of traffic out there, spring and fall, and it will affect rates as we go through different times of the season. This peak freight volumes, stress rail, this one here, this chart just goes back to show a little bit 2011 through 2014, some of the volumes again. We can see here, there's a lot of correlation here as we look from the years 11 through 14. As we start in January and we go through the year, and this year is a lot of consumer packaged goods, food, auto chemical, containers, different freight that's hauled by the railroad. And you can see that through the summer months, there's a lot more freight that gets hauled. And then this top line here, that is 2014. The freight is not dropping off, as you can see here, like it has some of the other years. But again, it just goes to show the railroad, it's not just all about grain. It's not about fertilizer. So it just goes to show that they do haul a lot more than just harvest fertilizer grain. This one here, average weekly U.S. rail carloads of crude oil and petroleum products. Again, you can see the correlation here from 2006 all the way over to 2014, how this number has grown, and we just see, you know, the number of rail carloads per week. You know, we're way up here. I mean, we all know, and we can see it as we drive up and down the road today. We continue to see more and more, whether it's ethanol cars, crude oil, whatever it is, being transported by the railroad today. And with the crude prices dropping today, will some of that be able to change? Yeah, a very good possibility that it might change. But again, we see that the railroad is moving more and more oil by rail, and then it affects, you know, how the transportation system works, how we get freight for the grain movement, how we get freight for our fertilizer movement as well. The barge freight, you know, we've seen barge freight costs increase about 3x this last year, moving freight from St. Louis, New Orleans, bringing it back up the Mississippi River system. We see increased transportation on the Mississippi, bringing salt, steel up the river, and we're seeing more and more grain being moved back down the Mississippi because of the high freight rates on the railroad. And that's affecting, you know, during the summer and the fall, they're trying to move as much grain down that river as they can today. But once the river freezes up in the fall, it's shut down. So all that grain has to go back to rail again. So there is some things happening on the barge freight. And again, that does increase the rates on the river as well. There is some question on the condition of the Mississippi River system. We all know that there's issues out there. You know, whether it's the river being too low, the river being too high, you know, we've got flooding issues, and then we've got low river levels. All of a sudden, we're dredging out some of the channels, trying to open them. There's a lot of the locks down in the lower Mississippi that are old, and it's just hard to get some of the barges through some of those locks today. There's probably some of those locks that are going to have a lot of work done on them again. That's going to affect a lot of this barge movement coming back up to Minneapolis again. You know, so this all changes, and then, you know, Minneapolis is a big hub for these barges to come back and bring a lot of this fertilizer back up to Minneapolis. Corn production, you know, we all know that record North American crop production. Corn has been a key player for us here. You know, as we look 2004 all the way out to 2014, you know, there's been some ups and downs, but again, you know, we look at record production on corn again this year. And we know that a lot of this record production today is sitting out in grain elevators and grain bins. This crop has not been moved to market yet. And, you know, all of a sudden there's going to have to be a lot of movement of this product to market, and when this starts moving, you know, again, how does transportation handle this? The end user technology outpaces distribution system. You know, the farmer growth happened over a 2 to 3 year period. And we saw that with the booming corn prices. When the corn price hit that $7 area, we saw the farmer that had this 12-row planter, all of a sudden he went to this big planter, and we saw a lot of that happen. I think everybody in this room saw it. There was a lot of change. And when that change happened, you know, the industry was not able to change fast enough to keep up to that pace. You know, the old fertilizer plant, and that's not a very good picture of an old plant, but the distribution system was slower to react, probably 10 years behind, And I don't know if that's an accurate number, but there's more and more new plants being built today. And people are trying to get caught up to the end user with that big equipment. And it's going to take some time to get caught up to what's happened out there. The technology of the farmer and how he has expanded, it's going to take some time for the retailer out there today to get caught up to what he's doing. 15 years ago, the farmer could probably plant a corn crop. It probably took him 14 plus days to put that crop in the ground. And you know, today it's probably 7 to 10 days, and you guys probably know that better than anybody. But the big equipment has changed a lot of things. And in turn, what's happened, the transportation system, the logistics, it just doesn't allow us to get this product moved fast enough back into the system to get it here to the end user. We'll talk a little bit about nitrogen. This chart here just shows the correlation between urea and corn. It's kind of hard to see this one, but if we go way back to this side, the blue line is the urea. It's NOLA urea is what this one is. The green one is the corn. And that is a December corn futures is what that is. This goes all the way back to 2007 is where we start right here. And then we just go across, and this brings us all the way up to current. That is November of 14 is what that is. But all this is just to show you the correlation of how the corn and the urea market, how close they do seem to track over the years. There's a couple spikes here that don't follow real close, and that spike happened back in, that spike, this big one here, happened in July of 2008. And this other one happened in, this one right here, that happened in May and July of 12 is when that one happened. And that was in that real busy spring when there was some shortages of fertilizer trying to get it to market is when that happened. But again, like I say, you can just see that there is some correlations there, and that spread continues to be there today. This one here is just a nitrogen spreads. It's just a spread showing between urea, anhydrous, UAN, and nitrate. Urea nitrate is what it is. But it's just, again, it's just showing how those four products just track all the way through. There is some very close correlations between those products. And you'll probably see there is maybe just a couple spikes at different times through the years. And again, that one starts back in 2009 and goes all the way through 14 again. This is a very busy chart here. But I think the biggest thing we want to look at is right down here. We're basically trying to tell you what this is. The imports coming out of Canada today, the numbers are going down. Any nitrogen products, any fertilizer coming back out of Canada today, the numbers continue to drop and drop. We're just not getting any urea. You know, there continues to be potash coming out of there, but the numbers continue to drop on us year after year is what's happening. And we're just not going to be able to depend on that market from Canada anymore. But the numbers continue to drop year after year. This is numbers here, just showing you the totals. We're looking at a total here of about just short of 3 million ton of urea that's brought into the U.S. Here's just a breakdown of the different companies that are bringing product in, break down a little bit of a percentage, but this is product that's being imported into the U.S. today from overseas is what this is. Nitrogen markets, the domestic market, as we look at it today, the market is trending upward. We're following a few weeks of sideways trading, but there is strength in this market as we look at it today. There was an increased demand in the fourth quarter. Leading into quarter one, we're looking that there could be some elevated prices in the urea market as we look at it today. Canadian production is still questionable for 15. We don't see that we're probably going to see a lot of urea coming into the U.S. out of the Canadian market today. Agrium is having trouble today with their production. Yara is having trouble with their production today. Historical trends point towards higher 2015 prices. And again, some of those charts, if we go back and look at them, you can see that from this time of the year going towards spring, it's just the historical trends are there. We will see prices trend higher as we go towards spring. Fall application was down in 2014. Some of the numbers out there will tell us that we probably had in the state of North Dakota probably 40% of a normal fall. That's all the fertilizer that got applied out there. There are some pockets that had probably a little better fall than that, but on an average probably 40%. Global influence, U.S. market trails behind the world, $25 to $40 per ton. This could alter some imports. India is expected to return to the market as early as quarter one. Rumor has anywhere from 800,000 to 1 million tons. UAN, U.S. market trends have moved up at this point. Major domestic supplies are sold out through quarter one. Canadian production is sold out through quarter one. North American production problems keep inventory slim at this time. And another thing we have to look at is, a lot of this product on the UAN usually got put into position probably a lot of times July, August time frame. And at this time, it's just starting to get shipped right now. So the whole system is behind on shipping a lot of the UAN. Global influence, U.S. market continues to lag behind the global market. Limited tenders offered in the international market. Ammonia, the trends show steady with firmness. Pipeline inventory remains slim. Estimates on fall application is around 50%. Now that's on anhydrous, so the numbers, and that I think is a real number again. Logistics will be a challenge in the spring of 2015, and I think the biggest issue there is trying to get these terminals filled up before we go back into the spring season again. Global influence, overall international market appears stable. India, Kenya, Brazil still have a demand going into quarter one. Phosphates, again, this one's probably a little tough to see in the back, but we start out over here. This is 2009. We do see some spikes when we did have some phosphate up over 600. And that is probably right in here. We're probably right about. That was June of 10, and we started to drop off probably January of 11 is when that thing started to drop off here. But as you can see, the numbers are, it has softened back here a little bit at this time. Phosphates, stable pricing with some rising trends. Inventory continues snug in the U.S. There is some delays on some of the imports today. Purchases throughout the system are lagging behind the average. Florida supply sold out, export. Tightened down on some of the domestic supply. Fall application was down in 2014. This is probably one market that you're going to want to watch closely. With some of these supplies tightened up a little bit. A year ago, We lost one of our suppliers. CF Industries sold out to Mosaic. You know, we start to see some of these companies being sold out, etc. That's where we have to be a little cautious. We take one of the players out, and then we lose some of this competition out here. Global influence, international market remains very robust. World market continues to show enormous demands in Q1. This is 2009, just to show you again just some of the volatility in that market as it comes across. Domestic market trends firm with upward movements. Canadian production is delayed on a restart by 60 days. Shipments to the U.S. terminals are 60 days behind. Logistics with the rail movement is deferred. Increased application rates seem to be in an upward trend. Russian potash producers have suspended production in 2 mines. World market continues to be on a tight supply. Ammonium sulfate markets, trends are firm, moving higher. Inventory thin in the marketplace. Producers are behind on shipments. Usage is outperforming the production, and we're seeing more and more ammonium sulfate being imported into the U.S. today. U.S. market will need offshore production to support the needs of what we're trying to supply to the farmer today. Liquid starters. Logistical delay on rail car movements has limited the ability to supply the phosphate acid producer. Industry market has put pressure on the ag markets. Limited shortage continues to be a struggle, causing pressure on in-season supply. Raw ingredients for the baseline starters continue on an upward trend. World market is paying higher price for some of the raw ingredients. And that has a tendency to push this, and it's pushing the acid price up today, and that is what's pushing, whether it be the ortho or the 1034 market today is what's pushing that number. Just a little bit, in January 14, the new Farm Bill was signed into law, which includes the Conservation Stewardship Program. This program supports producers who address resource concerns in a comprehensive manner by adopting conservation activists aimed at improving water quality. And there is programs for these products. It just to touch on this, whether it's an agrotane, an arborite, there is programs out here for the farmer that he should check with his NRCS programs to see what is available, but they are available to the farmer. Whether we purchase now, is the purchase value high or low? If it is high, what is your return on investment? Opportunity to secure application if you purchase now. Available inventory is locked in if you purchase now. Retailer has time to do some planning. If we purchase later, is the purchase value high or low? If it's low, what is your return on investment? Increased risk due to availability. And if there's going to be some product allocation issues. And I think some of the dealers in the room know that the product allocation issues, we did see some of that last fall on some of the anhydrous. Towards the tail end of the season, there was some allocations out there. Because of U.S. fertilizer markets are increasingly impacted by global supply and demand, high fertilizer prices can occur even when U.S. crop prices are relatively soft. And we have seen this. I mean, it continues to happen, and it will. Logistics play into getting product positioned in a timely manner. And I guess that is one that we continue to talk about a little bit all the time. Logistics will play into this. The BN is looking today at possibly taking some more freight rate increases in February. And again, we know that as we go into spring, that there's possibly some freight rates with the trucks, you know, as we look at that one going to spring as well. This one here, and the risk part of it, we just put a little bit, just cost per ton related to cost per acre. Just something we did here, just looking at if we had a $20 ton swing in the market, if the farmer was applying 350 pounds an acre, it's going to change his cost per acre $3.50 an acre. Just showing a little bit of a breakdown to you guys. If there was a $50 ton per swing in the market, at that same 350 pounds, it's $8.75 an acre. You know, $20 swing in the market at 125 pounds is $1.25. And if we go back at this $50 swing at 125, it's $3.12. Just something to look at there, just some numbers to look at. We're running close on our time here, but I guess at this time I'd just thank you for your time here, but I'll open it up for some questions and see if we can answer them for you. To buy now, purchase later. You know, again, it's about logistics, guys, and it's about having the product where you need it and when you need it. And the way that the farming is getting done today with this big equipment and how fast these crops can get put in the ground, it's about having the product in a position so you can get it to the field when you need to have it there.
Why are we having problems in Canada?
You know, some of those plants are old. Some of the plants are old, and they're just having production problems with it. It's just old production plants, and the plants go down. They're trying to get them fixed and get them back up and running again. Just old production plants is what it is.
My question about corn acres, I mean, as far as that's got to have such a huge impact out there, 90 million acres of corn for 75 million acres of corn. It's got to be just a huge impact. And also, Rabobank had their fourth quarter fertilizer report that was just out in the last few days, and they're saying about just the opposite of what you're saying. Not saying that there won't be some infrastructure, or not infrastructure, but logistics problems, concerns, but they feel that fertilizer, their first comment was fertilizer supply is outweighing demand globally, which is placing incremental pressure on pricing. They don't feel, their report I read yesterday, it seems like it's quite the opposite of what you're saying. Not saying you're right or wrong, whatever, it's just their
you know, it's just, it's about logistics again. How do we get it here?
That is huge.
You know, and it's huge. You know, we look at, you know, the Mississippi River froze up, well, it was, 1983 was the last time it froze up this early. When will it thaw out? You know, if we can get the river open early enough and get the barges coming back up the river, it's huge. You know, last spring it took forever to get that thing open and get, you know, fertilizer coming up the river. And if it's late again this spring, you know, it just, that plays into this thing, baby. Because then we've got to rely on the railroad. And the railroad has already told us that they're not going to, you know, you're just going to have to wait. If these trains can't get there, we're not going to, you know, we're not going to just cater to you guys if we've got grain to ship, if we've got oil to ship, we're just going to do what we have to do. If you have to wait, you're going to have to wait. They've told us if we need more fertilizer, we're going to have to build more storage. And we're just going to have to build more storage and have the fertilizer here because they can't ship it all in the spring of the year in a 10-day window.
Did all the anhydrous plants get back up and going? I know this fall, like, the anhydrous went crazy because half the plants are running.
You know, Agrium, their Redwater plant is down again right now. I don't know when that's going to get up and going. Dakota Gas supposedly is supposed to be up and running tomorrow, is what we're hearing. You know, so if they can get up and running now, it's going to help. But, you know, it's right now, nobody wants to come out with prepay numbers for anhydrous. They're all gun shy to put the number out there because they don't have the product to sell right now. So, I mean, that's telling us that they're a little bit on the gun shy, that they're going to have product there available for spring.